you sit across both retail and investing in African consumer markets. Where right now is the gap between consumer demand and actual investable opportunity?
I think there's a large gap, but it's very focused on where you are sitting locally and regionally. The question is very broad and it demands an analysis that is more country focused, nuanced, exactly. And because each market, if you see the problem that's being solved in Kenya versus Nigeria versus South Africa versus Morocco, they have different, the cultures are a little bit different, the way to solve the problem is a little bit different. And what is clear is that there is consumer demand and there is a gap in each market.
Private equity in Africa's consumer space has had a mixed reputation on returns. What has changed in how you structure deals that makes you confident in this sector today? Of course, there's still risk, but have you learned some painful lessons?
Yes, I think definitely there's been a lot of painful lessons. The early investors or private equity investors in Africa have very much taken an American or European approach to how they've invested on the continent. We thank them for bringing that model and going through some of the early pains to it. And I think us, as the next generation, let's say, of investors, we've applied an African twist to that. And some of the lessons we've learned, for example, is how do you take scale into consideration? How do you empower local partners, expose them to what you can learn from other markets, but then empower them to do it also in their home markets in the way that makes the most sense to them. So there's a lot more trusting, there's a lot more partnership in play compared to, I think, what was early days. Does it mean we're going to get better returns? We certainly hope so, but I think we are better equipped to reach that than I think previous investors have done.